Sarah Robak, contributor for the TD Ameritrade Network. Sarah, all eyes are certainly on Chipotle as the fast casual restaurant scheduled to post its earnings after the market closed today. What a year it has been. What are people expecting here?
Yes, Nicole, good afternoon. I think investors are so excited for this report after the bell today because of the stellar performance of Chipotle stock. It's nearly doubled so far in 2019. Many analysts are saying that there's additional room to run, and there's been a lot to be excited about here. In the very last report, it was absolutely flawless. Earnings per share handily beat the estimates. They reported 10% same-store sales growth versus the 8.3 estimate. They're seeing a lot of traction in their digital channel that makes up about 18% of their sales now. They're also seeing a lot of traction in their loyalty program that was launched earlier this year, but the expectations remain high. Earnings per share is expected to increase by $1 year over year, ending at $3.16 for the quarter. Revenue is expected to grow double digits, up 13% year over year. I think a few things to watch. Number one, all eyes are going to be on those same store sales growth numbers. In Q1, we saw 9.9% growth, Q2, 10% growth, and that was the sixth quarter of accelerating growth for the company. About 9.2% same-store sales growth is expected this time. It'll be interesting to see if they can pull out a double-digit number. Also, their digital sales, it grew 99% last quarter. I think there is some expectation that we might start to see that slow down a bit, the growth number, but it'll be interesting to see how much it actually slows down. And then finally, there's a lot of hype around their carne asada launch. They launched it nationally last month. I think investors are going to want some early insight into how that's working for them.
Absolutely. A little more expensive, but definitely delicious for that one. And by the way, we're going to be talking with an analyst later in the show about Chipotle, folks, so make sure you keep it right here because we have some more details on that. Texas Instruments, Sarah, the earnings also on deck. What are the analysts looking for on that one?
Yeah, so despite an overall slowdown in demand in the chip market, Texas Instruments stock is holding up really well. It's up 37% so far in 2019. It actually hit a brand new all-time high last week because of hopes for a recovery headed into next year. But they did beat on both the top and bottom line in their last report. They reported that revenue was down 9% year over year, but the good news was that it was better than what analysts had sort of feared for. So analysts are expecting both a double-digit decline in revenues and earnings per share in this report. I think a few things to watch for. Number one, I think their outlook is going to be key because many analysts are expecting a turnaround in chip demand headed into 2020. It will be interesting to see if their sentiment and their outlook kind of reflects that optimism. Also, I think investors are going to want insight into the impact that this company is seeing from the U.S.-China trade war because that has been something that's on investors' mind, and the chip stocks are very much affected by the uncertainty that we're seeing there. And then finally, the company has a key focus on growing in the industrial and the automotive segments, and so it'll be interesting to see if they give any commentary on the demand that they're seeing in that space. It makes up about over half of the company's revenue, but analysts have also been concerned about ramped up competition in those areas as well.
Right, yeah. Okay, great. Sarah Robak, contributor for the TD Ameritrade Network. We're going to watch for those. Thank you so much.